Breaking news that a debt ceiling agreement has finally been reached.
It seems like every year U.S. lawmakers peer over this cliff, looking at financial doom below, only to back away at the very last second.
While the crisis is not yet over, there is a framework of a deal in place now. Congress has until June 5th, we are told, to pass this deal in order to avoid defaulting.
U.S. lawmakers have managed to reach a debt ceiling deal, which means this latest crisis will have played out the same way it always has throughout all of American history. The U.S. avoids jumping off the cliff. But we couldn't help but wonder, what's down there? Like, yes, it's not going to happen this time. In fact, it's never happened and hopefully never does happen. But what would have happened in the U.S. if it just even once failed to raise the debt ceiling? To understand what's at the bottom of the cliff and why getting there would be so devastating, you do have to understand a little bit about how the debt ceiling actually works, because it explains a lot about why the world would basically end. So the U.S. consistently spends more money than it makes, which, is not unusual. Just about every country on the planet is in that situation. But what is unusual is that the Americans have a self-imposed cap on the total amount of debt the country is allowed to have. So if they run deficits every year, which they do, they have to every so often keep increasing the amount that they allow themselves to borrow to keep the good times rolling. In other words, they have to raise the ceiling on their debt so they can accumulate more and use that money to pay for all the stuff that they've promised to pay for. And that's the key. If they've promised to pay for things and then suddenly don't pay up because they haven't borrowed enough money to pay those debts, everything goes to hell in a handbasket.
I keep wanting to use the metaphor, a perfect storm. But this is like all of the danger minus the George Clooney.
So when the U.S. government doesn't have enough money to pay for things, it has to start cutting things. And the government would have to decide what's absolutely essential. Are passport renewals essential? What about national parks and museums? Grants for medical research? Infrastructure spending?
Goldman Sachs estimates that about a tenth of economic activity just stops. A tenth of the economy just stops. For sure, you'd go into a recession. That would happen pretty quickly.
And depending on how long the default continues, the fallout on this front gets worse and worse. Think of the millions of people on social programs like Social Security, Medicare, Medicaid. The federal government also directly employs millions of people, postal workers, military, and otherwise. Would they all get paid? But, this is all still relatively small-scale stuff compared to what a default would mean for the global economy, especially because we're talking about a country that is considered to be the safest of safe bets to repay its debts.
For a country that has that sort of influence economically on the world stage to also show itself to be capable of making irresponsible decisions makes people adjust.
When you think about it, the world of finance is all about trust. When the U.S. government borrows money, it'll often do that by issuing treasury bonds. This is the Capitol building. So basically you can think of them as IOUs, where I can buy in, let's say I'm over here, I can buy in for like $100. And the idea is that the US would get that money and in exchange promises to pay me back that same amount of money, but with interest. Let's say it's 4% in this case. And this is what a lot of government debt actually looks like. And that's considered a really secure investment for me because I know the US government is big enough and stable enough to pay me back whenever this bond matures. But it's not just me who thinks so. Corporations buy those bonds too, even other countries. And if the value of those investments goes down because the US can't make good on them, that's a huge hit to everyone who holds those bonds.
And that's when things get really bad. the market will start to disintermediate, prices will collapse or become volatile. And there are lots, not only do people directly hold these instruments all over the world, but there are lots of other instruments that are indexed to interest rates on US Treasuries.
Now, who owns that debt? $7.5 trillion is owned by foreign countries. Japan alone owns $1 trillion. China owns almost $900 billion. But think of everyone else, too, who also owns a piece of the pie. The Federal Reserve, state and local governments, big banks, mutual funds, pension funds, insurance companies, right down to individual investors. U.S. Treasury bonds are seen as one of the safest investments in the world. They're often considered risk-free. If suddenly they're considered risky, then their price drops, demand for them plummets, and suddenly you have entire markets whose stability may be intimately connected to the US bond market wondering, what the hell just happened?
If all of these anchors of the global economic and financial system suddenly come unmoored, then we are in fairly dangerous territory, because almost certainly we will have financial market panic in US bond markets, which will spill over more broadly into US financial markets, which in turn could affect financial markets around the world.
In a worst-case scenario of a protracted default, which I should say the US government has studied and even simulated before, even though it's never happened, it says we could see an immediate sharp recession on the order of the Great Recession. It figures the first full quarter after a debt ceiling breach could see the stock market tank almost 50%. That would hit retirement accounts and force a massive wide-scale pullback on consumer spending.
Borrowing money gets more expensive for everyone doing everything, whether that's the United States government or somebody with a mortgage or, and any other way that you might borrow money.
And just to be clear here, this isn't all hypothetical. In 2011, Congress only just barely reached an agreement to raise the debt ceiling at the 11th hour.
Negotiations did not go well. It brought the U.S. within days of economic calamity, and they had narrowly averted the cliff. It could have been disastrous for the U.S. and global economy.
But even just the idea of cutting it that close led the U.S. to have its credit rating downgraded for the first time. The stock market tumbled. The Dow Jones fell 17%. And to go back even a little further, in 1979, a word processing glitch actually did sort of cause the US to default. So, come with me. Over a period of about 3 weeks, when payments were due on these kinds of treasury bonds and bills, but not on $104, payments were due on about $120 million worth of treasury bills, these kind of government IOUs. The government just couldn't deliver. And though in the end it was really just a delay, not an actual default, because they had the money, they just couldn't get it out the door, the impact was real.
It didn't derail the entire economy, but it did raise questions about the reliability.
Interest rates on those T-bills spiked, going up 60 basis points, which is kind of a big deal. And it meant that every time someone bought a T-bill, it cost the US government more to honor it. The cost of borrowing went up. And according to the Congressional Research Service, that cost the government big time. $12 billion long term. There would absolutely be major geopolitical implications from a US default on debt. American stability is what helped create the world we know and live in today. Instability would be transformative.
There's a saying that when the US sneezes, the rest of the world catches a cold. So in other words, when we go into a recession, we take everyone else down with us. So if we as consumers and businesses are packing it in, that means that we're going to be importing less goods and services from the rest of the world, which would be especially bad to major global economies such as Germany or China, for example, that really rely on trade for their own growth.
And if the US and the West were suddenly unable to maintain their houses in order, there is no shortage of other countries eager to fill the void.
In the longer run, the Chinese renminbi might be a beneficiary of this move away from the dollar, and an increased international use of the Chinese renminbi in a variety of ways would help countries like North Korea or Iran evade sanctions by doing their transactions in that currency, which would be less subject to observation and identification of sanctions evasion network.
But look, I said it at the start, and I'll say it again. While raising the debt ceiling has become almost an annual, ultra-partisan political blood sport with nothing short of the entire world order as we know it at stake, it has been, every single time, pure brinkmanship, a game of chicken. Let's just hope we never actually have to find out what happens when we all lose.